Hi there, welcome to Kneppy Invest. The second week of 2023 is over, and if I had to be honest with you, things are starting to look interesting on the equity market, particularly the ASX. Not quite so interesting on the Nasdaq, but things are looking a little bit more, wouldn't say bullish, but I would say the sentiment is trying to shift from negative or neutral to positive. And in fact, the ASX has had two really good weeks. Apart from the first day, which was down, we have seen the ASX rally quite nicely. And not only are we seeing the ASX rally nicely, individual companies' charts are looking really interesting. And I could have chosen a plethora of charts in today's technical update, but I've stuck to about six. I've also included an ETF that I have wanted to buy over the past, say, year, and does look like the sentiment or the trend in that particular ETF is starting to turn positive. Today's focused company is Kogan, and we have seen Kogan share price rally, and I think definitely the sentiment in that company is starting to shift. We have seen the share price of Kogan consolidate over quite a few months, and potentially we are starting to see a little bit more interest in that company. So I'm going to show you three charts for Kogan. I'm going to show you the longer term chart and two shorter term charts as well. And the other companies and ETF that I'll be looking at in this video include Humm, Mt Gibson Iron, Hillgrove Resources, and Nickscali. And the ETF is Asia Beta. So I think that ticker code is ASIA, which absolutely makes sense. We have seen the share price of that ETF come down a lot over the past, say, maybe even 2 years, but it does look like it's turning around. So instead of maybe buying Alibaba or Tencent, maybe the ETF, the Asia ETF, is a really good alternative investment. Now to the featured video in this company, or I mean, featured company in this video. That's not quite a spoonerism, but I am afflicted with spoonerisms at times. Hopefully, you haven't heard that before in one of my videos. Anyway, the featured company in this video is Kogan. I am a shareholder of this company, and this is the longer term chart since they IPO'd on the ASX back in 2016. This was COVID-19 market darling, and that darlingness of this company ended around about October 2020 when the vaccines came out. In fact, quite a few companies, that was the height in their share price, or the top in their share price. And ever since then, share price of Kogan has been under pressure. In fact, at its height, at the height of the hype in this company, share price reached over $25. And if you do look at this particular chart, you'll notice there is a dashed line linking the lows we saw way back in October 2018 to the lows we saw back in June, July of this year. So that level is, or was, a pretty good support level for this company. And since the share price reached those lows back in June, July, share price has really gone sideways. To get a better look at that consolidation period for Kogan, let's have a look at the daily chart over the past year and a bit. In fact, this chart goes back over 2 years to September, October 2020, when the share price did reach that high of just about $25. I still remember the day when the news of the vaccine came out, and quite a few of the companies' share price dropped a fair bit, including Kogan. And then the share price sort of rallied towards the end of 2020 and start of 2021. Then the company released a trading update in January 2021, and that was really the catalyst for re-rating in the share price and the move of Kogan into a downtrend. And that downtrend maybe has just come to a completion. So the share price fell from about $25 all the way down to less than $3 in June and July of this year. Then we saw a little bit of a rally in the share price in July, a big update. I forget what that was about, maybe another trading update. And the share price has really gone sideways. So because there's a lot of shareholders who bought in at much higher prices over the past 2 years, when you do see share price rally like we saw with Kogan at the end of July, there will be a lot of selling. A lot of those shareholders who bought at high prices will want to sell out of this dog stock. I still hear this company being called a dog stock because the share price has fallen a lot. Now, the share price has gone sideways really since then. So all I'm waiting for, Kogan, even though I'm a shareholder because I want to add to my position, is a breakout in the share price. Preferably, I'd like to see a breakout in the share price on some really good financial news from the company. But sometimes a breakout can happen before that sort of announcement, that sort of good financial news. And potentially that's what's happening with Kogan right now, or perhaps it's just general positive sentiment in the overall market. So let's close in and focus in on what's been happening over the past 6 months. And the word I was trying to find there was zoom in. So this is the zoomed in version of the Kogan chart over the past, I think it's about, let's have a look here. I've just got to wait for my cursor to go away. There it is. So it goes back to late April of last year. So about 8 or 9 months of history here. So you can see that massive big up day in July. And then as soon as we went into the next few trading days, we saw the share price pull back. That's that selling. That's those shareholders who bought in higher prices, saw the opportunity to sell out, and there wasn't enough buying to overcome that selling. So there was an oversupply of shares wanting to be sold. And that's what happens when there's an oversupply of shares wanting to be sold and not enough buyers. You will see the share price pull back. And in fact, the share price almost pulled back all the way down to the lows we saw in July. Not quite. Share price hit a low of $2.90 towards the end of September, start of October. The share price has really gone sideways since then. But the last few weeks, we have seen a rally in the share price. In fact, the rally in the share price started just prior to the start of the new year and has continued since then. The other thing you'll notice here is the share price at these levels, just above $4, is fairly similar to the share price we saw back in July and August. So there is a little bit of supply there because there will be some shareholders who bought in July, August, thinking this was a breakout, and they were wrong, who now want to sell out. Potentially some traders who absolutely saw it absolutely wrong, thinking that was a breakout as well. So there is some overhanging supply right now with Kogan, and that's why the share price might have trouble getting past this level. So what level is that? Between about $4 and actually even $5, because the share price did reach a high of over $5 2 days after that really big rally back in July. But the other main thing here is I have included sort of that red area is the distance or the area between the 25 and 75 moving average, and that orange line at the top there, that is the 200-day EMA or moving average. And right now, the share price of Kogan has hit that moving average and is struggling to get through. So even moving averages can be resistance and support levels. So at this point in time, Kogan is facing two resistance levels, that 200-day moving average, and also that overhanging supply we saw back in July and August when the share price rallied by quite a bit. But things are starting to look a little bit more positive for Kogan. Instead of a red area between those two moving averages, it has turned to green. So there was a crossover between the 25 and I think it was a 75 moving average. And that is one thing I am looking for here with all companies. I am looking for crossovers. I'm looking for some positive sentiment. I'm looking for increased volume, which we don't see here. So that's probably the one negative, is we're not seeing increased volume. But that's not unusual this time of year. There is actually much less trading towards the end of December into the start of January because there's a lot of people, a lot of fund managers on leave. And sometimes you will see these large movements in the market because of less liquidity. So that's another thing to take into account right now with this rally in the markets. But starting to look more interesting for Kogan. If we can get above about $5, that would be really a change in sentiment and a movement in the trend of the share price from negative to positive. I think we could confirm that trend change if we saw the share price get above $5. Last week, I showed you this chart, which is copper. And I think I probably mentioned that copper at the end of last week was right just below a really strong resistance level at about $3.94. And we had seen copper struggle to get above that level about 4 or 5 times in the previous 2 months. So let's have a look to see what copper has done over the past week. And based off some of the share price rises in copper stocks, it wouldn't be surprised, or you shouldn't be surprised, to see that copper prices broke above this resistance level on significant strength and just kept on going up. So let's have a look at the most recent copper chart to the end of this week, which is January the 13th. And look at that nice little rally in the copper prices over the past few days. In fact, we had 4 pretty big up days in copper. Price of copper went from about $3.93 to about $4.20. The only negative day was the last day of the week, which was down 0.06%. So a much better looking chart here. We've gone through that resistance level. So now that is support. Because of the rally in copper, I wouldn't be surprised to see copper pull back towards that old resistance level that is now support. But definite a shift in sentiment with copper over the past, say, 3 or 4 months. And right now, copper is in an uptrend. And speaking of copper, I could have showed you quite a few copper charts or copper company charts, including Sandfire, which is looking pretty good, Aries Resources. But I thought I'd show you a company that is not producing just yet, but they hope to get into production in the next year or restart production or something like that. And that is Hillgrove Resources. And you can just see Hillgrove Resources share price mirrors the copper prices quite well. And Hillgrove Resources share price has rallied significantly over the past few months from a low of about 3.3 cents to a current share price of 6.8 cents. Now, on the Thursday, the January the 12th, the share price of Hillgrove Resources rallied 17% on really large volume. And the company did receive an ASX query. So the ASX wanted Hillgrove Resources management to explain why the share price rallied on really large volume. You can just see that volume, which was pretty big volume compared to what we've seen over the past year. And Hillgrove Resources came back and just said, well, copper prices have gone up over the past few months, and this is why. So I'm not sure exactly why ASX was surprised that Hillgrove Resources share price rallied. And then, of course, today on January 13, we did see a pullback in the share price because after that sort of rally, there was going to be some profit taking, and the share price dropped about 9.3%, but much lower volume than the previous day, and that's very healthy. We might see the share price of Hillgrove go lower even on the Monday, 14th, 15th, 16th of January, and if we see even lower volume there, on an even smaller drop, that would be even more healthy. But again, of course, Hillgrove Resources share price is going to be highly correlated to copper. And that's why Hillgrove Resources share price right now has moved back into an uptrend. Now let's have a look at iron ore. And this is the weekly iron ore chart going all the way back to the end of 2018. The reason I wanted to go that far back is because of that horizontal dashed line, which is support for iron ore and has been support for iron ore over the past 3 years. Even during 2019 and 2020, that's when it's set up as being a strong support level, because every single time iron ore hit that level at around about $80, we saw the price of iron ore rally. And then it really went on a rally from May 2020, from that $80 point all the way to a high of about $220, $225 by the middle of 2021. A lot of volatility in iron ore since then. We've seen the iron ore prices get sort of fall away all the way from that $220 level back down to $90, and then a rally in iron ore prices from $90 to $165, and then another drop in iron ore from $165 down to $80, and then for a brief period of time, the price of iron ore fell through that support level. And I think it fell through that support level for about 2 days. So there would be some nervous holders of iron ore companies at that point in time, but that was a false breakout of that support level, because since then we have seen iron ore prices go on another really nice rally. In fact, the price of iron ore has increased by about 50% since then. So hopefully no one sold out of their iron ore stocks because of that false breakout back, I think that was October 31st, if I remember correctly. So hopefully no one sold out of their iron ore companies. I did not. I do own, I think it's 2 or 3 iron ore companies right now. And one of them is Phoenix, and another one is Mt Gibson. And I'm going to show you Mt Gibson chart right now. And Mt Gibson can be quite volatile. This particular chart goes back to October 2021. Share price of Mt Gibson went to a low of 35 cents in that low period of iron ore. So remember, just like Hillgrove, Mount Gibson Iron share price is going to be highly correlated to the price of iron ore. And then the share price of iron ore reached a low towards the end of October, or October 31st, of about 37.5 cents. But since then, the price of Mount Gibson Iron has rallied from about 37 cents to a current share price of 61.5 cents. In fact, 62 cents. No, 61.5 cents. In fact, today, on January 13th, Mount Gibson Iron rallied 11.8%. So I'm wondering if they're going to be getting, please explain from the ASX. Why has the share price rallied like this? Why? I don't understand it. That's what the ASX will try to understand. And hopefully Mount Gibson will just tell them, well, iron ore price is going up. That's why share price has moved into an uptrend. That's why the price of Mount Gibson Iron is going up and up and up. Now, Mount Gibson Iron is a producer. They have a mine in Koolan Island, which is West Australia. I know Koolan Island well because, well, not well, but I do weather forecast for the airport at Koolan Island that Mount Gibson Iron commissioned back in 2020. Yeah, we do forecast for that particular airport, and they do hope to significantly increase the production from Koolan Island. And even though the market cap of this company is something like $600–700 million, I think this company has the potential to be producing or manufacturing or creating a lot of cash flow over the next few years. So it's not surprising to see the share price of this company rally as iron ore prices go up. And it should be surprising to see any company, any iron ore company share price rally, apart from Phoenix. Phoenix is not rallying all that much, 26.5 cents from about 22 cents or something like that. So that's one surprising. But I think once these other iron ore companies, producers, not stop their rallying, but once we see these plays maybe not come to an end, but play out, we might see more money coming into Phoenix. So I am holding Phoenix. Main reason I'm holding Phoenix is just because the amazing dividend yield that company has. And Mount Gibson is just the long-term, sort of the medium to long-term view in regards to iron ore. But when it comes to iron ore, I'm a little less bullish when we're thinking 5 to 10 years in the future. And that's mainly because of China and China's mining of iron ore in Africa. I forget exactly what that area is called, but they have the potential to produce a lot of iron ore in about 5 to 10 years at that mining sort of site in Africa. Anyway, enough about iron ore. And the next company we're going to look at is, actually, it's not a company, it's the ETF, the Asia ETF, beta shares. And this particular chart is a daily chart that goes back to the start of 2021, when the Asia ETF reached a max of about $14.25–30. And then the ETF moved into a downtrend, pretty well-defined downtrend, beautifully developed downtrend as well, that lasted from about March, April 2021, all the way through to December 2022. But the sentiment in Asia ETF is turning around. I would say, even if you look at a lot of those Asian-based companies, Alibaba, Tencent, you probably see the charts of those companies looking much more bullish right now. So one way you can play this Asia turnaround is buying those individual companies, or if you want to take the general broader view, just buy the Asia ETF. And this is one ETF I have been looking to buy and potential. I haven't taken a position yet in this particular ETF, but I am thinking about it very hardly. I am thinking about it quite hard, not hardly, quite hard. Now on to Humm. Humm. I haven't looked at this chart for a while, and this particular chart goes back to, is a daily chart, and it goes all the way back to April 2021. Another company whose share price has been a really nice, well-defined downtrend. And just like, I think it was Kogan, where I mentioned how the 200-day moving average was a resistance level. For Humm, you can definitely see here how the 200-day moving average has been a resistance level over the past 2 years. We have seen the share price of this company reach that 200-day moving average 1, 2, 3, 4, 5, 6 times during this time period, and then pull back. A few times it's tried to rally above it, but we have seen those rallies fade away as selling comes in. The last time we saw the share price reach the 200-day moving average was back in November. We saw the share price of this company reach a low in June of about 40 cents, which seems ridiculously low. You can see that share price plunge in June. Share price went from above 80 cents to 40 cents, so down 50% in 1 month. But just look at what's happening to the Humm share price over the past few weeks. In particular, in this week alone, between January 9 and 13, the Humm share price has rallied 20%. And the last time the share price was this high, at around about, what is it now, 69 cents, was way back during that plunge period in June. So we are talking about a 6-month high for Humm share price. A lot more positive sentiment when you just look at this chart. Does look like the trend in the share price is starting to turn positive. Again, the one thing I'd like to see is more volume. So very low volume, which again is understandable because of what time we are in the trading cycle. So much better looking chart. And not only that, you see the share price went above that 200-day moving average on strength. 5 consecutive updays or 6 consecutive updays on pretty good strength. Again, I'm saying strength in terms of the share price movement, not the volume, but the share price has gone well above that 200-day moving average. So possibly that 200-day moving average resistance has come to an end for Humm. Now to a company I have been thinking long and hard about taking a position in, and that is Scali, and we have seen a breakout above our resistance level over the past few trading days. So Scali's resistance level was $11.50. We saw the share price reach $11.50 back in, well, that's Joe, back in towards the end of August. Yeah, end of August, second last trading day of August. We saw the share price reach $11.50 and then pull back. Share price went to $11.50 again on the first day of December or the last day of November, and then we saw the share price pull back again. So again, that means that level is resistance. It's having trouble to get above $11.50. Some people might say, well, that's just a self-fulfilling prophecy because people see the share price getting to that resistance level and then start selling. That's the whole point. It's all about psychology. And when traders see that there is a resistance level, they're more likely to sell out. And what we want to see for that level to be broken, that resistance level to become support in the future, is we want to see the share price get above that resistance level on strength, good volume on a good trading day. And that's what happened 2 trading days ago. So it would be the 13th, 12th, 11th of January. We saw the share price go above that resistance level on pretty good strength, a nice looking one-day candlestick. And when I say nice, you see the share price ends at the high of the day. So it begins at the low of the day and ends at the high of the day. That is a bullish candlestick. And we have seen the share price continue to rally in the next 2 days. What I'd like to see over the next week or so is a share price to pull back to $11.50. If I see the share price pull back to $11.50 on low volume, I probably will take a position in Scali. The PE ratio is fairly low for this company. I said like 12 or something, which is low, but I think the market is expecting a downturn in earnings for this company. And whether that happens remains to be seen. But that's what the market is expecting. And if the market is wrong, this company is really cheap right now. That's all I have for this technical update, the 15th of January 2023 edition, focusing on Kogan and was it 4 or 5 other ASX companies, plus the Asia Beta ETF. So if you do hold any of these companies or the ETF, I'd love to hear your opinion and leave your opinion, your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.